All right, let's talk some stocks. It's Saturday, August 10th, but I'm doing the recap for Friday, August 9th. So, if you know, I was basically gone for the day. I knew the market wasn't going to be exciting. I figured it would probably sell off just because, the market's acting the way it is. And it's a Friday, so nobody wants to hold long positions over the weekend. So, people were selling off. I took the day off, went to the water park. So, anyway, over here, looking at the market, if you look at the composite over here for the Nasdaq, notice all these gaps that are happening over here, and this is not a fantastic thing to see within a chart. It's better to have, if you notice over here, a much nicer trend that's moving right like this, nice and steady, and lot healthier than over here, whatever this stuff is going on. So people are doing scattered spastic decisions, and that's not very healthy. It's not very consistent, and they're just trying to make a buck here or there, but it's usually not the institutional or professional investors. They might be trading lightly here and there, but not that exciting in that spectrum. So looking at the Dow Jones, 30 over here, notice the spread between this 200-day moving average between this region right here and this region right here. Notice how much bigger it is, and it's creating a wide spread from the 200 moving day to the current market price, which means it's overextended. The market has went too far, too fast, too quick, and eventually things will recalibrate themselves. All things balance out, right? Cause and effect. And it should have a pullback slowly. Now, can it go further again, another 1,000 points? Yeah, it can, but then you'll have a much larger snapback. So it's always great for the market to sell off, to consolidate. I love the sell-offs because it creates new chart patterns. It creates new opportunities. You can buy stocks at lower prices, the ones that you're watching. So why not? Just, don't ride stuff on the way down. All right, looking at the VIX, I like watching the VIX and seeing what it's doing as well from time to time. And you can see that if, from the 2011 time frame going all the way to now, which is the volatility fear index, they say, it's almost creating this triangle pattern. Now, if it breaks out of this and moves higher, we can definitely see some lower prices. But there are some stocks out there that you can watch if you're day trading, which I don't really recommend for beginners. You can check out things like Apple, which is always a day trader's stock. And notice it bounced off this resistance line right here a couple times, and you can basically have played that multiple times. One here, there's the move. Another one right here in May, there's a probably $60 move, and another one right now that's going through right now. Now, do I recommend getting in right now? Probably not. You might have missed it. I don't know. If you want to go in lightly, it's up to you, depending on how you're trading. Looking at the weekly, you can see again the same kind of thing happening. So again, you got to stick to your risk reward strategy. But I mean, if you look at that move, from here to there, or the earlier daily chart right here, I mean, it bounced off this at let's say 455 or so, and made the move to about 400. So 50-point move, even if you had 10 shares, 50-point move, $500. You had 1,000 shares, 50-point move, that's $50,000. So it's a more expensive stock for the beginners out there, though. So just be careful, but trading it. So there's the weekly. MasterCard, if you did some day trading, you could have done MasterCard, broke basically here. You could have actually waited for it to bounce off there, and notice that volume was picking up basically throughout the day. Again, from the 643 level to the 638, $5 move here or there. $5 move, 1,000 shares, $5. That's $5,000 in a day. Okay, there are some acorns out there like Priceline, so they're moving up, they're doing okay, but mostly it's a day trader's market, so I don't recommend it for the beginner investor. If you're new, just kind of stay out of it, watch the markets. Now, if you want to see longer videos, just subscribe to my newsletter on my website, TRADERSFLY.com. And I do more intense or longer videos that I send out privately to those users. So just go ahead, sign up on my website. It's free. You'll get an email.